the central bank continues its rapid-fire activities in the banking system. The latest is the regulator's directive to banks on interest payable on savings deposits. Bringing us the latest now on this and more is Joshua Odebisi, banking analyst at Vetiva Capital Management. Good evening, Joshua, and great to have you on the program.
Good evening, boss, and thank you for having me.
Thank you so much. What do you think the central bank is trying to achieve with the latest guideline on the interest payable by banks on savings deposit?
Well, bossing, it's simply a policy to encourage banks to continue to lend and also to encourage consumers, that's you and I, to take our money out of the banks and invest them into the real sector, really. So the CBN has obviously dropped interest payable on savings deposits to 10% of MPR, which is currently at 12.5, so that's 1.25%. This is much cheaper for the banks, which means that any of our deposits that are housed in your normal savings accounts, they will have to pay lower interest on it, much lower than the current, I think, between 3 to 5% that they currently pay. So this will mean that they should, in theory, be able to lend at a cheaper rate to the real sector, which is what the CBN has been trying to achieve. But on the other hand, we still have the CBN conducting the regular CRR debits. So this is keeping a bit of a control on liquidity. So it's not as if the banks have, a massive amount of money to lend to the real sector. But that's the policy, that's the way, the tightrope that the CBN is choosing to walk because of the fact that they don't want the banks to, go and speculate in the forex market.
But again, aren't depositors interested in a higher interest on their savings accounts?
Of course they are, but the fact is that it's not good for the economy. When you're in an economic downturn, policy dictates, or rather practice dictates, that you lower interest rates in order to encourage borrowing and to discourage saving. And that's exactly what this will do, because right now it's much more practical for somebody to take their money out of a savings account that was already yielding very low interest beforehand. Now it's yielding almost no interest, and then put it into either your money market or invest in real world businesses in order to stimulate the economy. And that's really the policy that the CBN has taken, which is part of the CBN's traditional purview, outside of all other controls. It's inflation and this kind of monetary policy.
Okay, let's talk a little bit about the new payment service banks, or PSBs. How are industry operators and analysts like yourself reacting to the entry of this new folks on Broad Street?
Well, I think first we have to realize that these banks are not coming in to compete directly with your traditional banks, simply due to the fact that they don't have the capital, they don't have anything close to the footprint of your traditional brick and mortar banks. So they are coming in more to cater to the unbanked. The drive is to really permeate the rural areas and get more people using the banking system. And so those are their targets. So even if they amass millions of customers, those customers are very, very unlikely to be from your traditional banks or being poached from your traditional banks, but rather they'll be in the rural areas where traditionally you don't see any brick and mortar banks, or they have very little access. So as your technologies and your 4G and your 3G networks continue to spread out all through Nigeria, so these payment service banks will be able to offer a service, usually through USSD banking, which will enable them to carry out transactions on a very, very micro level. And so it's very encouraging, because it means that more people will enter the banking system as time goes on, but they're not competing directly with the traditional banks. So they're not really worried about that. Although it would be interesting to see what kind of growth these payment service banks are able to achieve in the next few years, simply due to the fact that the Nigerian market is not very straightforward. So even though on paper it seems like a great idea and you might have a great business plan and strategy, when the chips are down and you're in the Nigerian market, anything can go wrong. So it will be very interesting to see what happens in the next year or two once these payment service banks are up and running.
It's a new beginning as far as the PSBs are concerned. So let's talk about the big boys. 4 among the top Nigerian banks have issued notices of delays in the release of their first half audited financials. What's going on here, Joshua? Do you have any idea?
Well, it wouldn't be right for us to speculate, but the truth is, obviously, these banks all submitted their financials to the CBN on time, and in times past, the CBN has been fairly quick to turn around and audit them. Usually, they would come out, sometime last week, they should have come out, but obviously, the CBN, for whatever reason, in its infinite wisdom, has chosen to delay that release. Some have speculated, and there was a little bit of selling in the market last week on Friday, just due to the fact that some people started to panic that maybe the results were quite bad, so that's why they've been delayed. But the truth is, we cannot be certain about that, because the banks seemed to be fairly confident that once they had been submitted for auditing, the CBN would be quick to release them. But for whatever reason, the CBN is taking their time. They're obviously going through the results with a fine-tooth comb. So we'll just have to wait and see what the reason is. But we shouldn't speculate that these results are bad. All indications suggest that from the few results we've seen, no bank has come out to report a loss. So I don't think that it's anything that bad, but it's still overall a bit of a concern, because it hasn't happened before.
Do you think the industry is well capitalized to support the economy at this downturn period?
Absolutely. I mean, if you look at the top banks in the industry, their capitalization is in the trillions, and I think it's not really an issue of capitalization. It's more of an issue of risk, because all these banks would be more than happy to expand their loan books tenfold. But the problem is, when you don't have a sufficient credit database or credit system, which is starting to happen slowly but surely, where the GSI came in, and that's a little bit of like a credit database, because it means that anybody who defaults from a loan, even though they will get their money debited from other banks, they would be able to recover that money. So hopefully with time, this should encourage banks to lend more.
Okay, a quick one as we're having this. This is just breaking news. UBA, one of those banks who says its earnings is yet to be approved, has just released its earnings. Josh, this is just as we are reporting. UBA Group is reporting 57.129 billion naira as the group profit before tax for the period ended June. That's lower than 70.27 billion reported. Profit after tax came in lower, 56.7 billion earlier, the same period last year, now reporting 44.4 billion naira, and total comprehensive income, however, slightly up if you add a few things in the middle, 64.1 from 62.0 billion naira. I'm sure it's going to be a very busy evening for you as well, Josh, as the numbers are beginning to come through now as we're discussing this conversation. Thank you so much. We will have this conversation with you some other time.